Hi there, I'm Jill Consort Beck, and welcome to another episode of Going the Distance with Go Long. I am here with Sanja E, and she is an expert in all things credit, as in credit score, credit reporting, all the things. And this is something that's a very underrated aspect of going the distance and financial wellness. And a lot of times when you go through a big life-changing event like a divorce, someone passes away and you have like an inheritance, all these things, there's a lot of things that may impact your credit that you may not realize. So we're going to get into it today. And I'm really excited to have this conversation. As a reminder, Go Long is a service. It's accountability by texting. And we provide accountability via daily nudges that help you live your best life without having to meet with anybody. And we focus on women 40 plus, in particular, women with autoimmune diseases. So with that, Sanja, welcome to the show.
Thank you for having me. I'm so excited to be here.
Yeah. So how did you end up doing what you're doing?
Ooh, that's a great question. So I started my journey, my career in finance and banking 30 plus years ago. And so the naivety of me, I assumed that everybody knew what I knew, right? Going through this whole journey. And so during COVID, what happened was everybody's bored. Everybody's trying to figure out how to talk and reach out to people. So I decided to go live on Facebook and talk about what was happening to me and my family. So I was denied credit just because my birth date was wrong. I didn't know that, but what happened was that, hey, they told me that I didn't get this loan. And I'm like, why? And so with that, I started doing research and going on Facebook Live, getting my entertainment and entertaining people saying, hey, did you know that you could get denied because of this? Do you know what's on your credit report? And people are like, hey, do mine, look at mine, And that's how Silver Crown Credit Repair Company was born. Just from helping myself, educating people, that's how it was born.
Yeah, that's awesome. I mean, that's kind of how Go Long started, because it was just around, you're kind of going through your lived experience, and then you're just outraged about what you're seeing, and what you're seeing is so not in line with reality.
Exactly.
And you just want to tell people look, this is a thing, and I don't want you to go through the same thing that I went through.
Exactly. And being a single mom of two young men, they were in college, just figuring out life. I was living off of my credit cards as the bridge to bridge the gap between paychecks. And so I was very conscious of what my spending was, but I know I was using my credit cards heavily. And so when things stopped and I couldn't do certain things, I was just kind of like, okay, well, let's take a stab at this. And I know that there are a lot of people that were in the same boat. Life happens all the time. And just getting us prepared for the unknown. How do we pivot? How do we rebound after something happened to us? And a lot of times people get stuck because they're like, well, I know better. I can fix it. But sometimes we just need a little bit of help. Sometimes we don't want to talk to our immediate family about what's going on. We want to talk to somebody outside. And that's where my company comes in, just to help people, to educate them on all things finance.
Yeah, I love that, because that's something I talk about also with Go Long, is that if let's say you have a habit and you don't even want to tell your best friends that you have this habit and you really want to kick it, I'm not going to tell anybody, right? It's completely confidential to me, and you'll get those nudges, as opposed to you talking to your friend and be like, hey, let's be accountability buddies and do blah. Not everything. Yeah. Well, not everything is something that you want to share with someone who's close to you. And we all have those things. And I give you a lot of credit for putting yourself out there and being like, yeah, I was kind of this was my reality, and it wasn't a great reality, and turning it into something really special. So let's get into, we're going to talk about the basics of how credit is established, because I don't think that most people understand the inputs into what your credit score is and how that impacts things.
Yeah. So Oh, we could talk in length on this, but let's just go very basic. So your credit score, there are 3 credit bureaus: Experian, Equifax, and TransUnion. Those credit bureaus have credit scores that they give to you based on what they know about you, what's in the world, what you've exposed, your relationship with different lenders. So your score can be between 350, as low as 350, all the way up to 850. 850 is the highest that you can be, and that is elite, excellent credit there. For those, I think across the US, I think they were saying, I think the last study I saw was that the the average American has about a 650 now. Higher in some states. There are some that, of course, are lower, but across the board, it's about between 650 and 680. You really want to try to get your score to be in the 700s. So how do you get to 700? Like, what goes into that score? We'll talk about what do they look at to get your scores first. So 35% is your payment history. So that is telling the banks or whoever, if you have a loan, how you're paying your payments. Do you pay on a regular basis, on a monthly basis when the payment is due? Do you pay? Are you late? Are you a slow pay or no pay? Right? That comes up to 35%. 30% of that.
So could I just ask one question? So slow pay, how would you characterize what slow pay is? Obviously, I know what no pay is, but is slow pay
no
meaning
pay is you're not paying it. Slow pay means you're paying it late in the eyes of the bank. Like, say if the payment is due on the 15th and you pay it on the 20th, you're considered a slow pay. But you do not pay it so that you are getting deemed as a no pay. So that's what a slow pay is.
Okay, that's great.
Right.
I'm sorry to interrupt. I just felt like that was an important distinction, distinction for people.
Yes. So if you are paying your bills on time, all the time, without delay, you're going to get all of the points that are in that category. Okay. The next category, the next big category is 30%, which is your utilization. Utilization is how much of your outstanding debt on your credit cards limits, how much are you using? So if I have a credit card balance that has the credit limit of $1,000, we'll say, I have a credit card limit of $1,000 and I'm using $900, then I'm using 90% of my utilization. In order to get the optimal score in that area, they want you to use just 30%. So that means of your $1,000, they only are saying you can use $300. Now, most people are like, well, I buy my groceries and I'm over the limit, right? But it's okay, because what you can do is just make it so that you make your monthly payment to bring it back down each and every month. So that is credit utilization.
How does that work with a card like American Express, like the traditional American Express, where there's no credit limit and you pay it off every month?
So then you'd get all of the points in that category, because it's not a card that you're carrying the balance, but we're talking about cards that have the revolving. So that would be like a Capital One, a Discover, a Chase card, Wells Fargo, those cards that allow you to have a balance every month. They'll allow you to carry that balance forward.
Okay, got it. Okay, thank you.
Yes. So the next category is comprised of 15%, which is credit length. So you're looking to find out if you are a new risk to the company or if you're not. So if you are like a new graduate, that this is your very first card, they're not going to allow you to get a $10,000 card. They're going to say, oh, well, this is a newbie. I'm just going to give her a card for $500, and then we'll see how she does on that, right? If you are experienced, like myself and we are wonderful in our years here on this earth. We've been around, so we have proven that we are responsible with our money. and paying all of our bills. So they'll say, okay, so she had a car back in 2000. She has had a house she bought in 1995 or something like that. So there is a length of history. Your story is told on your credit report. They can see that you're a wise buyer or if you're not. So they're looking at that. The next is new credit or no credit. So are you a new person again? That's 10%. A new person just trying to get credit, they're looking at that. And then the next one is the type of credit. So if it's, are you to get all of the points they would like you to have, I'll just concentrate on like a mortgage loan. If someone is trying to get a mortgage loan, they want you to have one installment account. And an installment account is an account that has a bill that has a beginning and an end. An example of an installment account is like an auto loan. I know that I am going to be paying this for 5 years. So there's a beginning and an end date for this loan. They want you to have two revolving accounts, which are credit cards. They want to see that be at the 30% level, but they also want you to use them. So don't get credit cards, say, I'm not going to use them and lock them up. They want you to just buy gas, pay it off the next, so just continue in that path. So one of the biggest things that I tell people is that when you're making up your credit score, you are responsible for 65% of what goes into it. A lot of times we don't have control over being a newbie getting the new accounts. We don't know about, the credit length because, hey, we just starting out or we're rebuilding. But we are responsible for paying our bills on time and the utilization. So that makes up 65% of the score.
Wow. Okay. That's a lot. So I have questions.
Oh, please, bring them on.
Bring them on. So one of the other things that I don't think a lot of people know is that if someone runs your credit, that also impacts your credit score. Is that correct?
Yes. And that goes into the category of new credit. So inquiries, we try to keep the inquiries pretty low. A lot of times I tell my clients when you're going to buy a car, you go there, they run your credit, they're running across about 7 different lenders, and they're bringing you back 3 different options. Well, what happens is now you got all of these 7 inquiries on your credit report, and you didn't even get credit for it. Meaning, I got a loan, but I only got 1 car when I got off that lot. I didn't get 7 cars, so I don't need to have all of these inquiries on my credit report. So those things need to be adjusted. Typically, they say they stay on for 2 years, but I am of the proponent of I don't need you to have all of these inquiries, and it does hurt your credit if you have more than 3 inquiries on your report. It's like 3 to 5.
3 to 5 over 18 months, 2 years, or just
2
overall?
years.
2 years. Okay.
2 years. Mm-hmm.
So one time what happened to me was I was thinking about switching cable providers, home internet and everything. And it was on chat. So I had a total written record of this. And he kept asking me, can I run your credit? And I'm like, no, I'm not giving you the okay. I was trying to find out the package.
Right.
And then I found out, I got an alert that he ran my credit.
Wow.
And so I found someone on LinkedIn who was very senior. And I said, this is what happened. I copied and pasted the transcript. You could find the transcript. This is not okay.
It's a violation.
And they took care of it. They couldn't say what happened to the employee. I have a feeling someone may have lost their job because you're not allowed to do that.
Especially if you're not giving, you have to give authority to authorization to them. Mm-hmm.
So I think that that's important for people to understand is that they're not allowed to do it unless you give explicit authority. And when you feel like you're in that high pressure situation, especially buying a car, which most people feel like they need a shower after they go, after that process, right? Is they're going to pressure you, and you need to be I'm not ready. Now, would you recommend people freezing their credit until they're actually ready? to buy the car? Like, how would you like guide someone through?
Yeah, so there's two approaches to that. One, I am a big advocate for credit unions and having done all of your research before you go. So I am always one that's like, oh, let's go. If you're interested in buying a car, check with your bank, your credit union, so that you can already know that you are in a position to buy this car. They've already looked at your credit report, told you what you qualify for. Then you can go into the dealership as a wise buyer. And I don't need all of the fancy, feeling all slimy. I already have my check. So I can drive off the lot with all of this. And that eliminates all of the people from running your credit through, through everything. You already shopped around for it already. And then I'm sorry, what was the second question?
Well, it was just more of like, do you recommend like freezing your credit
Oh.
when like you're going through this, or even in general, keeping your credit frozen?
Yes. So in general, I do keep my credit score, my credit report locked until I need it. And what that does is that nobody is going to be allowed to do anything fraudulent on your account. And that's for your protection. So I do suggest for you to have it frozen, but you want to just do that wisely and take it off when you're about to shop. Right. If you're going to go for a home mortgage, you know who's pulling it. And most of the time people set it, freeze it, forget it, and then they give someone the authority and then they have to come back. Hey, do you have a freeze? And then you just easily go online and unlock it and it's fine.
So do you unlock it with, say, each of the 3 credit agencies that you referred to earlier, or is there like a tool that does all 3 simultaneously?
No, each one of those companies are separate, so you would have to do it separately. And for that case, you can always, whoever the person is trying to pull your credit, you can ask them, who are you pulling from? You go to that one company, TransUnion, Equifax, or Experian, and unlock that one, and that's it.
Oh,
And you can actually say, I want to unlock it for 10 days. That gives the company 10 days to go and do what they need to do, and then it'll automatically go back on.
I love that tip that you don't have to do all 3 and you can just say like, hey, which one are you pulling? And just go to that one, because when we refinanced in 2021, we actually tried to do it in 2020 and we forgot that our credit was frozen. So then we went to all 3 and then we missed the window. And so when we heard that interest rates were going down again, we worked with our mortgage broker and we're like, okay, what's the window? And we unfroze all 3. And then I got the phone call, I gave the okay, and then I went and like locked everything up.
Yes. So when you're buying a home, typically you have to do all 3. Okay. But if you're buying a car, it's going to be based on the state that you're in. In Illinois, we're a TransUnion state. So in most cases, anytime you're going to have to unlock your credit, it's going to be for TransUnion. It's just based on region. I believe in the like in Atlanta, Georgia area, that would be, I think that's Equifax. I think it's
Equifax.
I think it's
Equifax. Yeah, all right.
But it's just really regional specific, so you don't have to worry about that. But just ask them, who are you trying to pull from? I can unlock it. You go online, unlock it for a brief window, and then they pull it, and then it automatically goes back on.
Okay. Awesome. So let's shift gears a little bit.
Okay.
There's a lot of people in our age group who are going through big life transitions. I have actually a number of friends who are actually newly single and the whole gamut of financial situations, right? Some of them were stay-at-home parents, so they don't have even an income history for themselves. Some of them have that, and they've had to pay off their exes to go away. The whole thing. So rebuilding. So let's talk about what people can be doing when that happens. So let's use the divorce situation. You're newly divorced and you had to either refinance your home and you only have 1 income now instead of 2. Let's talk through some of that.
So one thing before preparing. I know that, sometimes, and in my case, things comes out of left field, right? And in some cases, you know, and you can kind of plan. If you are able to plan even just a little bit, I would suggest looking at your budget, doing the itemization of where you are. Even if you are stay-at-home mom, you
Mhm.
have to come into the mindset of that you've been managing your home and you are the chief financial advisor, officer of that household. And what have you been doing? One thing that I would say is to get yourself a relationship with a credit union. And when they're asking you about income, I want you to say what the household income is, not your income in terms of what you are bringing a paycheck in. What that does is that it's building that relationship with them, and then you can ask for a credit card and a personal line of credit or a personal loan. And that's based off of household income. And that's just fitting yourself in a position of setting yourself apart. So with that, it's going to be in just your name, but it is based off of the household income. And that's how we're kind of preparing ourselves. And this is kind of where you're setting up your emergency fund, your emergency income, anything and everything you can put into this separate account. Now, that's not saying that we're hiding money or anything, but what we're doing is establishing our own credit so that if we need to go get ourselves a new house, if we need to go get, anything and everything, if we need to go get a new car, we've established a new relationship with some other lender outside of the marriage.
Okay, so should there be so both my husband and I are on the mortgage for this house.
Mm-hmm.
Is that something that people should check to make sure that they're both on the mortgage, not on
Yeah.
the mortgage?
Yes. So what you have to do is you have to go and check your recorders. You go to the Cook County Recorder of Deeds in your community. You're going to take a look and you can do this online. You can get your PIN number for your property ID, put it in and take a look. Oftentimes you can even call the bank and find out, hey, whose name is on here? Whose name is first? Because oftentimes we don't remember whose credit this was on. You can take a look at your credit report and see if that mortgage is reporting on your credit or not. And that will also tell you if you are the person that is the responsible party.
Okay. What are the other things that you're seeing? So someone comes to you, they're like, okay, I'm newly divorced and my credit is completely, for lack of a better word, fucked. Right? We
Yeah.
swear on this show.
No,
Right?
it's okay.
So the thing is that someone is just like, I am screwed right now. I just went to go get a loan or I went to go get a new credit card. What are some of the other things that you see happen that people might not be aware of?
So the first thing I tell anybody, let's just breathe. Let's take a deep breath because they just need to reset, number one. Secondly, you have to get a copy of your credit report. You get a copy of that, and I'm more than happy to go over that with you. But what you're looking for is anything that is out of the ordinary. And I know sometimes people immediately think it's my fault. I didn't do something, I missed something. But sometimes there's something on there that is harming your credit. It could be a collection that popped up that you had no idea. A lot of times we get stuff in the mail. It looks like junk mail. We're throwing it away without even opening it. And so what you need to do is to find out exactly where you are, right? If everything on there and it's just a matter of income, or if this is like, I just can't make things, I have more month than money, you know, we have to take a look at budgets and figure out if there's something that we can do to maybe restructure stuff. A lot of times we have relationships, we have credit cards that we're overwhelmed with the credit cards. I always tell my clients to call the credit cards, find out if there's a way for you to renegotiate things. Sometimes you can just be honest and say, hey, I'm having a really hard time. Is there a way, is there a program for me to pay something on the back end? Can I skip a month? That skipping that month can mean a whole world of difference. It may cause you to I can pay down something and get rid of it because now what I was able to skip a month, I can use that as to pay down something else. And then I don't have that bill anymore. And that's just freeing up cash. So those are some of the things that I would do. Call just any loans, any credit card companies, I will call, explain the situation. I'm going through a divorce. Do you have any programs for anybody? And oftentimes, they do not want to see you in default. They don't want that car. They don't want the house. They want to work with you, and they will continue to work with you. So, but we have to not run away from it. We have to kind of run towards it and put our big girl panties on and tackle it.
Yeah, I mean, I think that the typical thing is to go like this and, cover your eyes and cover your head and hope it goes away, where it's not. But the thing is that I've seen situations where certain things were forgiven. And I'm not talking obviously about the student loan stuff, but, people have like a really bad situation. The one thing that I think that if something does get forgiven, I don't know what the tax implications are of that, because I don't know if that's considered like income or whatever that is.
In most cases, they're going to give you a 1099-C.
Okay.
Versus a 1099-C that you'll have to claim on your taxes. But if I can get some relief right now, and I have to apply that to my taxes, I'm looking to help my situation at this moment.
Totally. I'm not saying that's a reason. Yeah, I'm not saying it's a reason not to do it, but it's something that you also don't want to get surprised with this tax bill.
Yep.
Like, let's say you count on your refund and all of a sudden your refund is a lot less. And that could very much be because of that forgiveness for that debt that you have. So, so when you find something on your credit report, so let's say it's like a cell phone thing or something like that, because you talked about like call the bank or, whatever, the credit card company. But what about if it's like a vendor type of thing that there's something on the credit report and you're like, hey.
Yeah. So there is validation. So any and everything that's on your credit report has to be proven if you challenge it. So you can ask a question. What happens is you're going to challenge it with the credit bureaus. You'll send a letter, say, hey, this is a foreign account. You say, I don't know. It's a collection. I don't know what this is. Or say it is the cell phone bill and they're saying that you were late and you were not, right? So what you can do is you can write a letter to the credit bureaus and do what's called a validation letter. You're going to say, hey, I was never late. Can you send me documentation proving that I was late? It is up to the credit bureaus, Experian, TransUnion, Equifax, will go to Verizon or whoever.
Yeah.
Let's say this person says that they're not. You have to prove that they have, or we're going to remove that. So they give them 30 days in order to get back to the company to say, yeah, she was late on July 1st, 2023. And then it'll stay. Now, if you believe that that's not right, you have every right to challenge it and tell them, okay, prove it. Send me the documentation that shows that I was late. But you have to stay on it. So it is up to them to prove, not for you to prove that you were never late. They have got to show you documentation that you were.
Before we get into kind of the next thing I like to talk about, we've talked a little bit about rights at different points of this conversation. Are there any other rights that you think people aren't aware of?
Yes. So rights. I want you to feel empowered. We have the Fair Debt Collection Act. I want you to know your rights in terms of collection companies. So I want people to realize that once someone, say your vendor, you had a Capital One card, you defaulted, meaning that you stopped paying that Capital One card. They sold it and wrote it off, right? So it's no longer, you do not owe them Capital One any longer. They sold it over to ABC Collection Agency. ABC, a collection agency, did not buy it for the full market value. So if your credit card bill was $10,000 and you defaulted on it, they didn't go to Capital One and pay $10,000 for that debt. They probably paid $1,000 for that debt. Now, when they come after you, they're going to come after you for $10,000. They're not coming after you for $1,000 that they say, hey, you owe this debt. I'm coming after you. Number one, if they start calling, you have every right to tell them, do not call me anymore. Only communicate with me via written in writing. And they have to uphold that. There is a fine if they go outside of certain hours of the day that they're calling you. And if they continue to call you and you've asked them not to, and you've documented that, there's a fine that they would have to pay. So you have to document everything. The other thing is, when they're harassing you or anything like that, just have to know that. You can also send them a letter saying, cease and desist, if they come to you for that. So I just want people to know that you have rights as consumers so that you do not have to worry about being harassed. I think that they cannot call you before 8 o'clock and they cannot call you after 9 o'clock p.m.
Okay, that's really helpful because I know people who have been harassed and you're just like, what is happening? And then sometime our phone number, our home phone number, because we still have a landline.
So rare.
Yeah,
rare people.
We're rare. We're a dying breed. But they somehow our phone number was given, and we would get these phone calls, and we don't even answer that phone. Right. No one who we would want to talk to calls us on that number, and so they would call at all hours, trying to threaten you and everything, and you're just like, wow. Absolutely horrifying. So I think that that's really great to know. So we talked about
one more thing.
Oh, go ahead. Of course.
Yeah. So also, when you get letters in the mail, so if you get a collection letter in the mail, so you've already told them, hey, I need you to just communicate with me in writing. Once you get something in writing, I need you to open the letter. Don't throw it away. Because I believe you have 15 days to challenge them. So right now they'll say, hey, you owe me money. And you'll say, well, I don't know you and you have to prove it. So you need to call them and say, hey, I don't know who you are. I need you to send me something in writing to let me know who you are and who you're supposed to be collecting from. The other thing that they must provide to you is the chain of command, the lineage. So if you owe Verizon, I need you to show me documentation that Verizon actually or Capital One sold it to you, because I don't want you acting as on their behalf and I don't know you. So what happens if I decided that I want to pay this collection bill and then Z company over here comes to the same debt? How do I know? So you're asking them to prove to you within that window, but it's up to you to respond to them in that letter. Otherwise, they can just put it on your credit report, and then it's up to you to tell the credit bureaus to take it off.
Got it. Okay. There's a ton of information in there, so this is super helpful. So the other thing, we talked about divorce. Now let's say, there's a lot of people on this who are going to be listening to this who are within 10 to 15 years of retiring. Right? So I have to think that while you're bringing in income and while you're preparing to retire, what are some of the considerations people might want to think about as it relates to their credit once that income is not coming in?
So preparing for retirement, as we're getting close to it, and just looking at all of our expenses. Is that what the question is more of?
Let's look at the expenses, but is there anything that say you wouldn't be as eligible for because you're not bringing in that income from a job, right? Surprises that happen that you've seen. And I didn't ask the question in an elegant way, but basically it's more of you're retiring and you're oh, I'm just going to go and do this. I have the assets and everything else. And then all of a sudden it's oh, wait, but you have no household income or something like that.
Yeah, so I think that we just have to take a look at what our income is going to be after we retire. A lot of times people are They're looking at what they have and they think that they're going to bring in the same amount of income. So I think like now, 10 years, 15 years away from retirement, I want you to start looking at the Social Security and seeing on that statement, get your statement to say what it is that you'll be bringing in. And then you're going to look at the lifestyle that you have now, figuring out if that's the same lifestyle that you're going to, excuse me, still have, and figure out if this is something that's sustainable based on the lower income. And if it isn't, then we need to start working towards that. And I'm saying this to kind of get to your answer. So then we can take a look at what we're doing right now, what credit cards we have, what outstanding loans we have, and figuring out if we need to do any type of consolidation. I don't mean debt consolidation, like going out there to say that you're not going to pay it, but really taking the opportunity, if you have good credit, to get better credit rates so that we can get rid of the debt before we go into retirement. I know that before, like when our parents were coming up, they had, they bought their house. So by the time they were ready to retire, they no longer had their mortgages because they got the 30-year mortgage. They worked 30 years. Now they don't have it, so they're not worried about it. But those times are changed. People have bought different type of home. They start a home, then they moved into a bigger home. But really taking a look at that and just figuring out what your lifestyle is going to be and starting to look at what you have on your expense or like your credit cards and loans, anything. And you can always consolidate. You can always look for opportunities to get the balance transfer cards that have the 0% to start chopping those things down. Looking at the credit unions, like I said, they have offers to refinance car loans, even if you bought it new and you want to refinance it. Just looking at any way you can just save money, because the more money that you can save, that means the more you can put down towards the principal to get out of that loan faster.
Now, one of the things you also brought up was around the home ownership and how much that paradigm has changed from generation to generation. Yeah. Now, what if, right, you pay off your home? And my understanding is that if you pay off your home, that's not great for your credit.
No.
Like in terms of like, because I guess what I was told, so this is good myth busting, okay? If you pay off your home, you don't have that like another thing to show like monthly history.
Oh, okay. I see what you're saying. So if you were to pay off your mortgage, what would need to happen is you want to have another installment loan on there to keep the qualified, But there are so many different avenues now that you can have something. I'm sure people have heard of this, but it's SELF. So SELF is a installment loan provider. But just for people, usually people think of it in terms of rebuilding their credit. So if I'm rebuilding my credit and I'm telling you that you need to have 2 revolving accounts and you need to have an installment loan, you would put SELF on your credit report as an installment loan to get that credit, right? What SELF is actually a savings account. And so if you paid off your mortgage and you feel like you're going to get dinged for not having an installment loan, you can go and get something like a SELF on there to maintain your good credit. Most of the times, as long as you're not messing it up, your credit will be fine. But if you believe that paying off your mortgage and you no longer have that installment loan, you can go and get some of those type of accounts on there. And it'll be like, I'm just going to pay $100 a month. I'm going to pay $50 a month. But at the end of the term, that money is actually going to be returned to you because it's just a savings account.
And so is that through a bank or a credit union?
It's a company called SELF.
Oh, it's a company. Okay, so it's a private entity who does that. Yeah. So you've talked a lot about credit unions, and I've heard a lot of very positive things about credit unions. So is that something, do you think that in your experience, credit unions are easier to work with than banks, or you just happen to be mentioning credit unions?
I think that when we're thinking in terms of rebuilding our credit, it's important for us to not think in terms of big banks. We always see the big banks like a Chase, a Wells Fargo. Those people, those companies or Capital, even Capital One, don't necessarily have your best interests at heart. I feel like I am more of a relationship building company. And so I would like people to utilize the credit unions a little bit more. Credit unions are more lenient. And if they know you personally, they have more wiggle room to do things because they're more standalone as opposed to having so many different chains of command in which they have to stay in this box and cannot understand that for 1 month you might have been laid off, but you're back on track, you know?
Mm-hmm.
So
Got it.
that's the thing. Yeah. So that's why I talk about the credit union so much.
If you're trying to rebuild your credit, do you have like, say, 3 steps that you would advise people to do?
Yeah, so I think number one, if someone was trying to rebuild their credit, number one, you've got to know where you are. So that means to get your credit report. Two, I want you to review your credit report to make sure that there's nothing on there that you are not aware of. So we can just take a look at that. The second thing is I want you to know your numbers. And what I mean by that is know what money is coming in and what money is going out. And you're going to review, recap control on both sides, sometimes faster than other to recover, but we'll know how much money is coming into our household and then see if we can do something to change jobs, to earn more income, do mystery shopping. Like I did it all, mystery shopping, was it surveys online, anything just to bring in some extra income because I was a single mom as well.
Right.
So my whole paycheck went to taking care of my children. But then it was like, well, if I wanted to ever buy myself something, I always had to do like mystery shopping or surveys or anything. Focus groups are good just to bring in some extra money.
Mm-hmm.
And then you look at the expense side. So everything that's going out of the household. So rent, mortgage, car note, like you start looking at things that maybe you need to cut out. Maybe I'm going to cut out my cable bill. Maybe I'm going to cut out my Starbucks. Those are some of the things that we can control. So it was 3 things that I'm doing. Oh, and then I'm going to pay down my debt based on that. So when I was talking about the focus groups and the mystery shopping and things like that, those are the extra income that you can apply to your debt to pay it down faster. Sometimes we can't afford to like get a second job, but we can do these one-off things to kind of increase our income.
What's mystery shopper?
Ooh, that was like so fun. You never heard of that?
I've never heard of that.
So I'm in Chicago and they would have you would sign up
Mm-hmm.
and they would give you a task of I would go to T-Mobile stores.
Okay.
And I would just walk in and act as if I was shopping to get a new phone. And this is like where they are checking their customer service, making sure that their people are working. And so I would have to fill out a report to say, well, as soon as I walked in, I was greeted or I wasn't greeted. It took this long for this person to come over to me to ask me if I needed help. Was the store clean? All of those different things. So you're given a detailed report of that establishment. And I did it for that. I did it for like going to casinos and going to gamble and seeing how that experience was. So it's basically the companies are asking for feedback on their customer experience.
Okay, so they hire a third-party company to recruit people to go in and see how their customer service really is and what that experience is like.
Yes, and you can get paid.
Wow. I have friends who are like going to be very excited about this.
Yeah.
All right, so the 3 things. Let's summarize those 3 things that you said that people
get your
should
credit report.
Yep.
We're going to look at your income and expenses and see if there's anything that we can cut. And then the other thing was try to pay down your debt based on what you have. Mm-hmm.
Okay. And I really like that idea where you're like, you know what, evaluate, like if there's ways to kind of consolidate your credit to a lower interest card, because there's always some kind of zero interest thing for 12 months. And, to kind of just keep doing that, it kind of allows you to kind of survive in advance in a way where you can just pay down principal.
Yes. And I think just the biggest thing is just to make sure that people remember that they are in control, that they should not give so much power to the lenders. The communication is the key. To call them, see if there's any new deals. Even if you have stellar credit, sometimes you need to say, hey, I'm a long-term customer. Do you have any deals, anything out here that can help me? And they're willing to work with you because they know that you can go across the street and get another loan from somebody else.
Awesome. So the last topic I want to talk to you about, it's definitely a serious topic in my mind, and you've seen it in the press a lot, is around sexism and racism in credit. And I mean, obviously, I've never experienced racism, in terms of getting a loan, but I know it's there. And I know that there's been independent analyses where men and women who have basically the same type of credit history, women did not get as favorable terms as the men did. So if someone thinks that they've been, like, say, the victim of some kind of like sexism or racism in terms of, being approved for a loan or being approved for a certain preferable rate, do I have recourse for that?
Well, there are a couple of things that I think about, and I would think the first thing that I would do is make sure that you have the proper documentation. Make sure you're writing and journaling everything that happened and you believe to be within your rights. How did you feel? How did this person make you feel? What are the facts, right? The second thing is documenting and talking to the Attorney General of the state. You want to do that. And before all of the rhetoric of the CFPB, there was that recourse. But with all of the noise that's around that organization right now, they're not really making the moves until the political standings are a little bit more clear. So right now is that. But I think it would be just really talking to the Attorney General at this point in terms of that. I would notify, if the bank is a large bank, I would notify the president of the bank and also their law department to notify them of your experience. And that's putting people on notice to see if there will be any change to it. But that's what I would do.
Okay. So, and when you're talking about the Attorney General, you're talking about the state level Attorney General, the state
level Attorney General. Yes.
Okay. All right. Well, Sanja, this has been so helpful, and I want to just put out there for everyone that all of this is just informational purposes only. Obviously, you can hire Sanja, and all of her contact information is going to be in the show notes. So, Sanja, what socials are you on? So that when I list it out, I can tell everyone.
Yeah. So I am on Facebook. I am on, and it's Sanja E. Noble.
Okay.
I am Silver Crown Credit Repair. No, silvercrown750.com is my website.
Yep.
And we are also on LinkedIn.
Okay, great. That is awesome. So I want to thank you for coming on the show. There's been so much fantastic information here that I really appreciate you sharing. And we're going to have all the ways you can contact Sanja. So thank you so much for sharing everything. And with that, just want to tell everyone, have a great day, have a great week, and remember, it's your life. Go the distance, go long.